This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 7/13/22, show number 408. Well, everybody today, Nick, is talking about one thing and one thing only, CPI.
Yes, the CPI number was very, very hot. It was released earlier. I believe that was up 9.1% versus 8.6% in May. Core CPI actually was a little lower at 5.9% versus 6% in May. And this was the fastest rate of increase since 1981. I don't think anybody really is surprised by this number, but I will say this much, that if you realize what has happened in the market, this is a backward-looking number, so this is going back to June, but commodities have already started to sell off and have gone into correction mode. So the markets are going to look forward, and I think this is probably a buying opportunity.
Wow, so you think bump in the market, but what about with what's going on? Well, getting a little ahead, but on the U.S. dollar index, the dollar is now in parity with the euro, which means it's a great time to go to Europe and stock up on everything.
Yeah, the dollar and the euro have gone into parity. We've talked about this for years now, that this was going to happen. People didn't believe the dollar could get this strong. But, you know, I do a lot of work with the WD Gann techniques, and I'm showing that around 109 to 110, the dollar will put in some kind of a nominal high. I don't know if it'll be the high, but it'll be some kind of a top. So the dollar will start to back off a little bit. That'll help. That'll start to juice up the markets a little bit, in my opinion. So we'll see if that does take place. But the dollar has, it's at the strongest level. You have to go back to 2002 to see the last time the dollar has been this strong. But it is overbought. It's getting parabolic. And again, around that 109, 110 level, we'll probably expect a stall out of some sorts.
All right. Well, yeah, the tree does not grow to the sky. And this is just a relative play, if you will. It's not that there's any great strength in the dollar. It's just everything is weaker, which is what you expect because the whole system globally is based upon the dollar.
That's right. The dollar is the world's reserve currency. Not that it's the best currency in the world, but it's the best house on a bad street, right, so to speak. And, you know, the dollar money comes out of Europe, it comes out of Asia, comes out of other places, and it goes into the U.S. dollar. And that's what we've seen. It's been the safe haven with all of the geopolitical events that we have taking place. So I think the dollar now is getting a little long in the tooth, but it might have a touch more to go before it puts in some kind of a high.
Yeah, I always say that the dollar is the best looking house in Baltimore.
I remember that saying, and I still agree with it 100%.
Hey, so we got earnings coming up, and what do you think? And it's Options X?
That's right. Options expiration will be this Friday, but earnings season officially kicks off tomorrow with JP Morgan and Morgan Stanley, 2 mega banks. We'll have to see what they are going to say when these financial giants report. More importantly than their earnings is probably going to be what they forecast going forward. I think everybody's going to look towards the guidance right now. The banks have been some of the weaker performers as of late. Even today, the financials look a little bit weak. You have JP Morgan trading at around $111 a share. Morgan Stanley's down at around $75 a share. And the charts really don't look all that great. But again, we'll see the reaction in the market, because that's what really counts. It doesn't matter what these guys report, how much they make or lose, or what kind of write-offs they have. It really just matters how the market perceives them going forward. So that will start tomorrow. And then in the next 3 to 4 weeks, we're going to get lots of earnings out here. The mega cap tech names will report later in the month.
And really, when you look at things here, we know that defaults are up on auto loans, right? The people got their PPP money and financed their vehicles and used the PPP money as a down payment. Now that's coming home to roost. foreclosures are also heading up. No surprise there. So, I mean, the economy really isn't looking good.
No, the economy is looking awful, to tell you the truth. And don't forget the biggest part about it. And I know defaults are up, and you have real estate topping out, and auto loan defaults are up. But here's the biggest thing, Kerry. It's the inverted yield curve. Nobody wants to talk about that. When you look at the 2-year Treasury note yield, it's higher than the yield on the 10-year note, and that's a problem. Right now, you have the yields on the 2-year at 3.09%. The yield on the 10-year today is at 2.978%. These banks can't make money if they're going to borrow at the short end and loan at the long end, right? So it's inverted, and that usually signals a recession. And I think that is coming a little bit down the road when we get to September, October. You'll be hearing nothing more, and we've already heard a lot about it, but the talk of the town will be recession.
All right. So technically, we're already in a recession. We've had 2 consecutive quarters of negative growth. It probably is 3 or 4 if we actually had an accurate inflation deflator. So we're already in the recession.
Well, we probably are, but everybody talks about the labor market being so strong. How could we be in a recession? But just go out there and look at people putting money into their gas tanks, and you'll see that a recession has already begun for a large portion of society.
All right. So one thing we haven't talked about, but it's real. The price of Rolexes is heading down.
I just saw that. That's a good indicator. The other indicator that I like to look at too is yacht sales. And that's something I followed pretty closely in 2008. And I saw how yacht sales fell off a cliff. So that's another one right up there with Rolexes.
All right. So Rolexes and yachts, the prices are down, which means the sales are down. One thing that happened during the pandemic with all the stimmies is the price of Rolexes doubled, and yacht sales were sky high. Also, we like to look at RVs because they're always financed. Somehow, there's a segment of the population, which I just don't understand, but that's just me, that can't get enough of these things.
Yeah. Well, if you look at some of these RV names, and that's a good one to track because they went wild during the pandemic time. But the RVs have really come in. Winnebago stock, I believe, early in 2021 was trading at around $87. Now it's at 53. Camping World, CWH is that ticker symbol. That's another one that was trading near $50 earlier in May 2021, and now that's at $23. So we've seen a real drop in these RVs. They've come in quite a bit. And honestly, the charts don't really look very strong on them right now.
And finally, gold and Bitcoin. Gold is now up a touch. You would think on such dire inflation news that gold would be heading up, but I guess the dollar is influencing that.
Yeah, I think the strong dollar certainly held back gold. But if you take a look at a gold chart, it's actually come off the lows pretty nicely as we've been talking. So that's a little bit of a positive, and it's very, very oversold. There's a lot of support down here in gold futures right now. If you look around this, 1700 area or so. So I think gold is due for a technical bounce of some sorts here. A lot of the gold miners are starting to really pique my interest. I bought some call options on Agnico Eagle Mines, ticker symbol AEM. That's up $1 today. So I like that one there. Newmont Mining, if that gets a little lower around the $55 level, I'm going to jump on that one myself. And again, there's some interesting plays out here in the gold space. Another area I really like right now, Kerry, in the precious metal space is platinum. I mean, platinum looks prime time right now. I bought some PPLT. I own shares in that, and I love the chart on platinum right now.
All right. Well, platinum, it was over 1,000, and then the commodity correction came, and it just got slammed.
Yeah, it got slammed, and I'm telling you guys this, but I was telling my members back, probably 6 months ago, this was going to go to 820, and here we are now, and it's right at that 820 level, and this is where you got to step up to the plate, and this is where I bought it.
All right. And Bitcoin has again broken through its 2017 high, and that is really bearish, but it's bouncing around support there. And
Yeah, Kerry, when you look at this Bitcoin, it's flirting and weaving. It's bobbing and weaving around the 20,000 level. It goes up a little bit, then it goes down a little bit, up a little bit, down a little bit. And it's exactly what you said. It's flirting with the 2017 peak that was made in December, right around that 20,000 level if you look at Bitcoin futures. So, all in all, it's living to fight another day. The bigger picture, the trend is down. This has not satisfied that 13,500 level, which I think it's ultimately going down to. So right now it's fine. It can bounce around here. But remember, the bigger trend is down, and this really has to test that level before this thing can find any kind of decent low.
yeah, well, if you remember, we called the high at 67.7. That was a triple top, and it's done nothing but go down since then. And before we were doing this show back in 2017, I called the 19.7 high as well, and everybody said I didn't know what I was talking about. And hey, I never anticipated it was going up to 67.7. I was going to be a buyer at under 3,000, but it didn't stay there very long. I never bought it. My bad.
Well, the good part about an asset class like this is that the holders in it are people that have not a lot of experience in the trading world, and now they're starting to notice that how technical this is. And if you could just follow the footprints of human emotion, which I think you will see on a chart, this is a very, very tradable equity. I personally do not believe in Bitcoin as a true asset class, but now with these future ETFs like BITO and BITI, I think you could trade it like anything else. And again, Bitcoin, has a shelf life, and it'll be around for a bit. But overall, I really have a hard time thinking this thing is going to be around forever. So trade it, and that's it. I would never marry this thing. I know people have put their life savings in this. I probably can't walk into my local grocery store without getting 10 to 20 people in one shopping experience asking me about Bitcoin. So, again, trade it as an asset class. Don't fall in love with it. It doesn't make any money. We don't know who produced it. We don't know where it really comes from. For all I know, Kerry, this thing could be made up by, anybody out there. And somehow it caught fire. And I don't even see Elon Musk talking much about it lately.
Yeah, it's certainly not about Dogecoin, right?
He did a number on that one, but no, I don't hear him talking about Dogecoin at all anymore. And I don't even know where that's trading at. That thing's probably down to a couple of cents.
All right. Well, that is it for today. Make sure you go over to Nick's site, inthemoneystocks.com, see how he continues to beat the market averages over the past several decades. The Twitter feeds are at ITMS, at Nick Santiago01, and at Kerry Lutz. Emails are welcome. KL@kerrylutz.com. We'll get to them hopefully this Friday or next Monday at the very latest. I promise you that. Nick, we'll talk to you on Friday.
Sounds good, Kerry.